If your New Year's goal for 2024 is to buy a new home, but you're worried that the high interest rates are gonna make your housing payment impossible to pay, in this video, I'm gonna show you some options and ways that you can significantly reduce your housing payment. So let's go take a look. All right, so let's say you're looking for a home that's $300,000. Your down payment, let's say it's 5%, 15,000. Your loan term is a 30-year fix. Interest rate 7.5%. Property taxes, let's estimate that they'll be about $4,000 a year. Your home insurance will be $1,750 a year. And because you didn't do 20% down payment, you have to pay private mortgage insurance or PMI. And let's say that's $220. So this is kind of the scenario that you would be, let's say, presented by a lender when you find the house that you want to buy. You're trying to figure out, what is your monthly payment going to be. And this gives us an amount of $2,692. Now let's open a new tab with the same numbers and look at what are some of the things that we can change. So of course, home price is the first one. So let's say that, we're able to negotiate, or you are able to negotiate using a professional realtor that can really help you out getting the best price possible. Let's say you get $10,000 off. So let's say instead of 300, we get the house for 290. Okay, so immediately your down payment will go down, right? Because 5% of 290 is lower than 300,000. So that's good. Let's say that your interest rate, so you have a couple options here, right? So one of the popular options that you probably have been hearing from lenders is a 2-1 buy down. The way that works is, the seller will pay a certain amount of money for you to buy into this program. And for the first 2 years, you'll have a reduced interest rate. So the first year, if let's say it's 7.5%, you'll pay 5.5%. Then the second year, you'll pay 6.5%. And in the third year, it'll come back to the 7.5% original interest rate that you were pre-approved for. This is a great option, assuming rates go down, because within that 3-year period, let's say if rates went down to 5%, which would be awesome, you could refinance and then have a way better payment. But what if rates don't go down during that 3-year period? Well, if you can still afford the 7.5% interest rate, you should be fine. But if you're kind of, maxing out what you can afford with the hope that rates will go down and they don't, you could be in trouble. So 2-1 buy down, great option, something to keep in mind that might be helpful for you. But let's not use that example here. Let's say that you want to do what's called a permanent buy down. That's where you basically pay a certain amount of points. Point is what you term use to buy down the interest rate. I won't get into too much detail, like how much is 1 point and how much it reduces it by, because I'm not the expert in lending there. But let's say that you're able to, we got that $10,000 reduction on the home price. And let's say that the seller is able to put another 5,000 into points. So let's say instead of 7.5%, we're able to get the interest rate to even 7%. So 0.5% less. All right, so 7%. So we got a 0.5% discount there. Let's say that, property taxes, people don't typically shop, base if property taxes are low or not. So I won't mess with the property taxes. If the house you ended up liking is $4,000 versus like $3,800 or $3,500, I mean, it is what it is. So I won't touch the property tax. But obviously you can possibly find a house where the property taxes for the house might be lower, and that's kind of icing on the cake. Homeowners insurance, let's say you have good credit and you shop around, and instead of $1,750, you can get the same apples to apples benefit for $1,500. I always tell people, don't go for the cheapest insurance, go for the insurance that has the most coverage for the lowest amount of money. Make sure you shop around, right? And then let's say private mortgage insurance, because you have good credit, instead of $220, let's say we do, I don't know, $170 there. So your total monthly payment is $2,461. So how much money did we save by making all these changes and trying to, maximize our savings with all these different options? So originally we were at $2,692. And now we came down to $2,461. So that's a difference of $231 per month. So naturally, the biggest change to lower your payment obviously came on the interest rate side of things. But there's other things that, if you're able to tweak them and improve them, like homeowners insurance, the sale price of a home, over the long term, those are going to make big changes on how much you're paying for the house and the cost and all that. So those are important to keep in mind. Another thing that's very important is that you're working with a professional lender that can review all the numbers with you, that can give you different options like we talked about, the 2-1 buy down, permanent buy down, even adjustable rate mortgages. Kind of give you all the options and give you pros and cons of each so that you can make the decision based on what you feel most comfortable with. And also work with a real estate agent that will help you negotiate, that will give you information about the market and keep you in the loop with what's going on so that you can buy when it makes sense for you, but it's also a good time in the market. If you have any questions, let me know in the comments below. And if you like to know what's going on in the Rochester real estate market, make sure that you check out this video. Thanks for watching.